We saw the stock market crash in March, and now we could be seeing it crash all over again. What's up, everybody? I am Jaspreet Singh and welcome to the Minority Mindset. The stock market broke record highs in February, and then it came down at record-breaking speeds in March, and then in April we saw it recover at record-breaking speeds, and now we could be seeing it come down all over again. The stock market has been confused, to say the least. Like I said in a previous video, it feels like every time a new jobs report comes out, two things happen. First, people are shocked by the amount of jobs that are lost, and second, the stock market hears this news and then it goes up. I'm not going to go over too much of why the stock market and the economy aren't moving in a straight line. Instead, I want to talk about today why there's a good chance why we could see the stock market crash again. So make sure you watch this video until the end because you want to make sure you can capitalize on whatever's happening around you. But before we get into that, hit that thumbs up button below because if you don't, then YouTube doesn't share our video with anybody else. Subscribe to our Minority Mindset YouTube channel. That way you don't miss our new financial education videos every single week. And hit that little notification bell too because if you don't, then YouTube won't let you know when our new videos are released. Okay, let's look at some numbers. On February 12th, 2020, the Dow Jones passed 29,550 points. Then on March 23rd, the Dow Jones came down all the way to 18,591 points. That's a 40% drop off of its high, and that's the fastest drop we've ever seen in the stock market in history. Well, this is around the same time when the Federal Reserve Bank came out and they said that they were going to use their emergency powers to print trillions of dollars and pump up the market and stop this stock market free fall. This money injection that the Federal Reserve Bank gave to the markets helped prop up the stock market, and it brought it above 24,200 points on May 8th, 2020. That's about 17% off of its February highs and 30% higher than the March lows. Now, lots of people and investors are very hopeful about the economy opening back up because they think that we're in the clear now. But if reality doesn't meet with people's expectations, then we could see the stock market come back down, and you'll see what I mean. The interesting thing about looking at this stock market chart between March and May, where the stock market kind of recovered, is that the economy didn't recover. The economy, if anything, got worse, yet the stock market grew by 30%. Now, there are a few reasons why it's very likely for the stock market to come down again in the future. But before I get into that, let me just remind you, investing has risks. You are never guaranteed to make money when you invest. You might even lose money, so always do your own due diligence. And in case you didn't know, I am just a random guy on YouTube, so I can't predict the future. But one thing that I do like to do is look at fundamentals. How strong is the economy? How strong is the company? How strong are consumers? And things aren't looking the best right now. Hold on. Are you telling me I don't look good right now? That's not what I meant. But let me get into why there's a good chance why we could see the stock market come down again by first talking about the wild card. You can kind of think of our economy like a balloon. Back before February, our balloon, the economy, was working hard to generate air to stay inflated. But then came this pandemic, which was an external force, and it came like a needle and it just stabbed the balloon. Oh no, my balloon. Initially, our economy deflated, kind of like this balloon, and the stock market reflected that. That's when the Federal Reserve Bank and the government came out and they started pumping up the economy by blowing air into it. In our economy, this air is free money that's being printed to hand out to businesses with loans and grants, and it's the money that's being given to people with stimulus checks and unemployment checks to keep people afloat. So now you have this balloon that got popped that became this, but then the government and the Fed came out with an air machine to artificially inflate the balloon. That way it looks more like this. That reassured the stock market, so many people started buying, and now lots of people are buying into the idea that this is going to be a very smooth and kind of straightforward economic recovery. But I don't know how true that is, but we'll get to that later in this video. Normally, our economy works like a balloon because the economy works hard and businesses work hard to generate money, which fill up the balloon. But right now, there is a hole in the balloon and it's being pumped up artificially through this air machine. But at the same time, the hole hasn't been fixed because people are still getting sick and hospitals are still full. And at the same time, businesses are struggling, so they're not able to generate this air that would be able to fill up the balloon. To fix this problem, the government and the Federal Reserve have hooked up our balloon to an air machine. That way there's more air being pumped into the balloon that can leak out of one hole. But the problem is this air machine can't run forever. At least I don't think. Here's what we know at the time of me recording this video. First, the Fed is going to begin their program in May where they're going to give an unlimited amount of money to businesses in exchange for their toxic and worthless assets. So this is going to help pump up the balloon because businesses that are holding on to worthless investments will now have a whole bunch of cash thanks to the Federal Reserve. Second, the Federal Reserve Bank is expected to launch the Main Street Lending Program in May, which is a way to give easy cash to businesses that have under 15,000 employees that can't find cash anywhere else. So this is another way to help blow up the balloon. Third, in the last month and a half or so, 33 million Americans lost their jobs. But these 33 million Americans also applied for unemployment benefits where they will get state unemployment benefits and $600 a week from the federal government and a stimulus check. Again, this is being done to help pump up the balloon. Pump it up. All these measures are pumping up the balloon. Not naturally, but artificially. However, this air machine that's pumping up the balloon with the help of the government and the Federal Reserve Bank has a timer on it. This extra $600 a week that's going to people who are unemployed is scheduled to stop in July. Stimulus checks should all be sent out by August. I know it's weird that they need 5 months to finish sending out stimulus checks, but it is what it is. The Federal Reserve Bank's Main Street Lending Program is scheduled to end on September 30th, 2020, and we don't know exactly when the Federal Reserve Bank will stop buying toxic assets off of businesses, but if I had to guess, I would say it's something around the same time when they stop this Main Street Lending Program, so the end of September. If this timer doesn't change, that means the machine that's artificially pumping up this balloon is going to turn off in the fall. And then, if the hole isn't sealed, or if the balloon isn't functioning properly to produce its own air, then we're gonna see it deflate. Investors are very hopeful that by fall, when this machine turns off and this artificial air goes away, that the balloon will be able to generate its own air by itself. That way, even if there is a small hole still there, it'll be able to generate enough air to stay inflated. This brings me to the second issue. The balloon, or our economy. Fundamentally speaking, our balloon has a couple issues. For one, there's a hole on the back of it, and second, it's not working. It's not working naturally to produce any air. I'm gonna get into more of what this means in a second, but let me also make sure this is clear. While some of this is bad news, the reality is that every crisis comes with opportunity, and there are ways to make money in every single market for the people who think different. That includes right now. I could be wrong. Maybe the stock market will shoot back up and the economy will recover in a straight line. But what we do know and what we've seen happen time and time again in history is that over the long run, the economy, the stock market, and strong companies tend to go up. And it's virtually impossible to try to perfectly time or predict the market. If you are a newer investor, don't just try to perfectly time the market or time the bottom, because the people that try to do that usually end up missing on huge upsides. Instead, especially if you're a newer investor, find a couple good funds or ETFs that you like and just continuously invest in them week after week or month after month. You don't need to be a millionaire to capitalize on what's happening around you, and more millionaires are made during recessions than any other time because, well, investments go on sale, and if you do want to invest in the stock market, you have to use a stockbroker, and that's very easy to do thanks to our sponsor Webull, and I got the link in the description below. Webull is a commission-free brokerage. That means they don't charge you a penny to make a trade, and you can do your research and make trades right off of their app. I've talked about in previous videos how Webull has a limited time promotion going on where they're giving Minority Mindset fans 2 free stocks just for investing with them. Well, I was emailed that this promotion is going to be changing on May 12th. Between now and then, if you open up a free account, you will get a free stock. And then if you deposit $100 into your account within 24 hours of opening your account, you will get a second free stock worth up to $1,400. So if you want to learn more, start investing and see how you can get your free stocks, I got the link to where you can learn more and do that in the description below. Minority Mindset is a partner with Webull, so if you use them, we will get compensated, but there's no additional cost to you. It's free to open an account, and they don't charge you a penny to make a trade. So if you want to learn more and get started, I got the link to where you can learn more and do that in the description Balau! As states open up and lockdowns, and many people believe that our economy is going to go back to normal and our balloon will be able to run like normal and produce enough air to inflate itself. It's not so simple. The question is, will there be enough air produced by this balloon, our economy, to offset whatever hole is still left in the balloon come fall? This pandemic is going to continue to be poking holes into this balloon for I don't know how long, but at least into the foreseeable future. That means businesses like the restaurant business and gyms and the travel industry and non-essential spending businesses like stores in the mall like Gucci are gonna continue to get hurt. Gucci gang, wait. Gucci's essential though, right? That means it's going to be harder for these businesses to sustain themselves and help inflate the overall economy, the balloon. And at the same time, we don't know how big this hole is going to be come fall, and we don't know how long this pandemic is going to continue to poke needles into the balloon. Until people can go outside and not worry about getting sick, I have to imagine that people are going to hold back on spending money like normal, like they did back in February, until they don't have to worry about getting sick. Maybe this virus will completely magically go away come fall. I don't know. But many experts say we're not going to have a vaccine to prevent people from getting sick until 2021. If we have needles poking this balloon for another year with this artificial air being turned off, then that's going to slow down the recovery. We just saw Nordstrom and J. Crew announce that they're going bankrupt. And JCPenney and Hertz are on the same path, and we probably have a lot more coming. You have to understand that people and businesses really aren't feeling the full effect of this economic slowdown yet. I mean, people are losing their job, and some of them are making more money in unemployment. And the businesses that are holding on to toxic assets that would have otherwise pushed them into failure are really not that worried because, well, they're able to sell these toxic assets for top dollar to the Federal Reserve Bank. That's creating this artificial sense of security, but at the same time, businesses aren't fundamentally sound enough right now to support themselves without this artificial life support. So you have our economy, like this balloon. Then comes along this pandemic, which is an external source like a needle, which starts poking holes in the balloon. Now, to combat this, the Federal Reserve Bank and the government come in and they attach an artificial air machine to pump up the balloon so it looks okay. But this air machine has a timer, and the businesses that are supporting this balloon aren't able to fundamentally support themselves yet. Right now, the oil industry is facing its biggest crisis in history. And so there's a good chance that oil companies and energy companies are going to be forced into bankruptcy over the next 12 to 18 months. The retail and shopping mall industry aren't going to be the same because people don't feel safe shopping there, and airlines are losing business each time they operate their plane. What I think might happen is we have all this pent-up demand to buy things that was built before this whole lockdown and pandemic started. That's going to unleash, but then eventually that demand is going to start to go away. The people that wanted to buy a home or buy a car or buy something nice in February but couldn't because of all these lockdowns are going to now have the opportunity to buy all that stuff that they want, and that will create a short-term bump in the economy. But when this pent-up demand goes away and this life support goes away, that's when our economy is going to face a real test. We're probably not going to see a massive quick drop like we saw in March. I mean, that was panic because nobody knew what was happening. A real bear market is when you see a gradual decrease in stock market prices, 1% declines instead of the 10% declines that we saw. So once this free money goes away, that's when the tide's gonna go out, and that's when we're gonna see how strong the economy really is. And then, if it happens to be that the economy isn't recovering the way that people expected it to be, that's when all this positive sentiment is gonna flip. And that would bring the stock market back down. I know, this is already a lot, but there's one more factor you have to add into this puzzle. This is 2020 and it's an election year. Donald Trump is rerunning for president, and the basis of his campaign is going to be the strength of the economy and the stock market. That means there's a good chance that we could see more of this wild card, free money, being used to artificially pump up the economy, because that would make investors feel more reassured and that would pump up the stock market. Just look at it reasonably. The president doesn't want to see a stock market crash right before an election, and the Federal Reserve Bank chairman is appointed by the president. So if the president loses, then the Federal Reserve chairman would also lose his job. Normally, I would say, and you would say in a free market, that politics shouldn't affect the stock market and the economy, but we've seen how it has worked to kind of inflate the whole stock market and try to keep the economy alive. That's why you can see the stock market move in one direction and the economy move in a whole different direction. You can see news come out saying that 33 million Americans lost their jobs. and then the very next second you hear, the stock market is rallying. But you have to think that eventually, who knows when, but eventually reality will have to set in. I mean, even Warren Buffett is sitting on the sidelines because to him, this doesn't make any sense either. So there's a lot of issues. You have this artificial life support, you have this pandemic, you have how fast we can recover, and then you have an election on top of that. Want to make smart decisions with your money, you need to pay attention to what's happening in the finance and business world. And if you're looking for an easy way to stay on top of what's happening in the finance and business world, well, that's why we created the free Minority Mindset newsletter, where our team first breaks down the top finance and business news, and then we show you how this news affects your wallet. That way you can be smart with your money, and then we will email you this newsletter Monday through Friday at 7:30 a.m. Eastern Standard Time. You can get our newsletter for free by clicking the link up here or by clicking the link in the description below. By the way, our financial news emails are different from our financial education emails. Thank you for watching. If you enjoyed this video, share it with one friend. That way we can help spread the word. If you want to learn more about the hidden cost of printing all this money, I already made a video on it, and you can watch this video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.